Greetings, traders, and thank you for joining with us on this Friday afternoon for our special update on the boomerang training for this week. It's an exciting week, and I wanted to go over a lot of things with you today. Before we get started, two things. First of all, be sure to read the disclaimer and the risk disclosure and understand this fully. We always have to remind each other and remind ourselves that this is a very high risk business, and trading futures involves losses. It involves gains. There's a lot of excitement when there's gains. You got to be aware that sometimes if you have losses, you might get a little depressed, and you have to know how to mentally deal with that and how to train yourself to become a really adept at futures trading because of these things. But on a real basic level, you have to realize you cannot trade with money you can't afford to lose. You can't trade on the cheap. You have to get good quality tools, equipment, and education to understand this business, just like a surgeon. A surgeon can't go into an operation with used equipment. I mean, they can if they have to, like in some of the third world countries and things, but you have to have top equipment, and you have to know how to use it, and you have to be willing to spend money on education, and you have to, most of all, spend time on research and learning how to trade. And then comes the big part, which a lot of we're going to talk about today, and that is how to develop the trading skills to learn how to win. So make sure you understand this disclosure. It's most important. If you can now please let me know that you can hear me okay and see my cursor moving, that's very good. Um, okay, great. Thank you very much. We got a confirmation of that. Good to see you all here today. Got a lot of you in here, and I appreciate you coming out on a Friday afternoon. I'm going to record the webinar, so if you stick around for a while, that's great. If you have to leave for any reason, don't worry. It will be recorded, and we'll have this up on the blog for you. So good to see you, Daniel. Good afternoon. Hello to you, and thanks, James, Sid, Greg, all of you coming in here. Most appreciated. Okay, so let's get started here. I'll be a little bit more brief today. I did have, you can see here on the data series, we go back here, and I've got 14 days loaded here on purpose for the reason of going back over the last 2 weeks of trade setups. Now, what I'd like to talk about today, before we get started, is that there are three key things that you need to do. You know the boomerang setups. Most of you know them very well, and I'll go over those in detail again, as I always do. And I'll show you a couple of new little tricks and ways of watching the market that'll help you get into trade setups correctly. But first of all, it's most important to realize that number one, that you have to really research Boomerang, especially if you're brand new and you just purchased Boomerang. We've had a lot of new users come in lately, and that is to make sure and set your market replay and research Boomerang and do the work at night along with the webinars that you watch here with me training you on. And the main thing is, and I know this sounds almost a little bit amazing, but it's you have to develop faith in the Boomerang system. And the reason is when I show you the still charts here and I show you the 90, 100% winning trades that go by, I'm not making these up. For those of you who are just kind of sitting in and observing, I'm not making these up. These still charts, a lot of people say, well, why don't you trade live? Well, we can trade live, and I do every day, but I'm saying we have the still charts are the same because our rules for Boomerang are fixed. They're not just random kind of take some ideas and wing it at Boomerang. There are exact specific rules for trading Boomerang, and these dots on the signal line here, which are the pullbacks, and I'll go over in a minute the exact characteristics of Boomerang. These dots are fixed on this chart. I can go back a year from today, and you'll see a dot where the market pulled back to the signal line and marked it there, and it'll still be there today. They're not going to move. So the point of that is when you look at the still charts, the main point is to learn how to trade with Boomerang, to learn the exact rules and the way Boomerang works, and to realize that once you do that, you develop what's called faith. Faith is a very powerful thing. I'm not talking about religious faith or anything, although that's present. People have accomplished miracles by having faith in different religious or spiritual views. But my point is that when you follow Boomerang and you practice it and you go back over the still charts and you trade it live and replay, you got to remember when you get to that right side of the chart, listen carefully. This is really important. and you see, like, say you're over here and you've just taken this short here and boomerang and you got long, and now you see the market coming over and it's shifting here. Let's say you're right here and you see this shift. You see the Cobra cross over the dynamic trend band number one. You see them both turn green, the blue bullish color, and you see this here. When you click on the buy here, when you go up here and click buy, what is it that you're really expressing? That's right. You're expressing a tremendous amount of faith in Boomerang that you're going to click here and go long because the setup's exactly correct and that market's going to bounce for you and go higher. You're expressing faith. So there is a lot of faith that needs to be developed to trade Boomerang or any system that you have. If you develop your own system, well, obviously you develop that yourself like I did with Boomerang. And after a long time of using it and testing it and retesting it, that's why I released it on the market. I had so much faith that this was going to help traders to break their losing cycle or break their break even cycle and get into steady winning trades. So you need faith in Boomerang. You're going to need that every time you put on a trade because it's a very nervous business. It's a business that practically every time you put on a trade, you have a little bit of faith crisis, a crisis in faith, as they call it, because you could just go, oh man, what if I lose? There's the pain of losing. Well, that's another issue. You have to get over the pain of losing and the pain of winning, or the joy of winning, whichever way you see it, because in the end with Boomerang, you're just trading the setups, and you really shouldn't care about loss or gain. You have complete faith in the system. You know that there's 80 to 90% winning trades. And all that's left is what? That's right. The patience to wait for the exact setups. That's number two. Faith in Boomerang system, complete faith, number one. Number two, the patience to wait for the exact right setups. You have to know the exact right setups first. And my God, if I could get everybody who bought Boomerang right away or started out on eSignal to just come to these webinars and learn how to trade the exact setup, they do a lot better. But a lot of people, for some reason, they just want to buy it and take it out of the box and just start trading away on it without any knowledge of anything. They don't even bother to practice learning the exact method. They think, well, I can just invent my own method or something. Who knows why? That's just human nature, I guess. But the patience to wait for the exact setups upon learning them, and the main topic of today, and I think this will ring a bell when I tell you, realizing that there will be different market conditions, especially every now and then, where that'll create a more difficult market to trade in. We all know this. I mean, remember we had this period mid last month where we were having these fast markets. Oh my God, the volume was opening up every day at 2,000 plus contracts. Now, I'll give you an example. This is a volume meter here. And every morning when I start trading, and you should probably do the same if you believe in what I'm telling you here, here's the market opening up. And whenever they open up, these histograms are going to jump up here. The very first thing I do, before I even mark the opening range on the charts, which is another valuable thing to do, I'll show you today, is I watch the volume coming off the first. This is a West Coast chart, so it says 6:30 instead of 9:30. But I watch the volume, and I watch the first 5-10 candles here, or histograms. And the volume here, notice today was 1877, 1806 is really leaping higher here now. See, that's 1700. And it held up for the first 10-15 minutes. They're holding up 1600, 1500. Pretty good, pretty good. Way into the first half an hour, the volume was holding up here. Now, that tells you a lot, because usually on slower days, let me show you an example. Just note this, how they're holding up here even into the first half hour above 1,300 contracts. Let me show you the previous day, which I know was slower. Okay, now compare that to yesterday's. You with me? Here's yesterday opening up. 1,200, 1,200, a little bit slower. Remember I just showed you 1,800 and all that? Look at that. And then 10, 15 minutes of the market dropping right down to that green line, that 700 level. That doesn't disqualify trading. It just means look at that volume slowing right down. And then look as we go further. Now look at this. Into the first half an hour, And I remember I just showed you that. They were hanging up into the first half an hour, 1,200, 13, 1,500 contracts. Look at that, right into the first half an hour. Now they're dropping way down to 300 average on this is a 4 period moving average of the volume. Look at that in the first half an hour dropping way down and kind of sloughing off here. And then coming into the, 700 is a good solid level. That's not a problem. But do you see that? Do you see the difference? I think the previous day it was even slower. I'll just quickly run back there. It takes just a second. Let's see here. I think I scrolled back further enough here. Let's see. But if you do this every morning and you kind of watch this, I think you'll find it be very valuable. Look at this. Here's the previous day. Even slower, opening up at 12:05, dropping right down to 700 within 5 minutes. Notice this, and they're all hovering around 900 average contracts. They started dribbling down in the first half an hour, and then look, after the first half an hour, they're falling right down to the 500 average there. See, I'm just trying to show you the difference. So right away, that's one thing you can do every morning and go, a little slower volume, a little bit less trading activity for whatever reason. Usually if there's a news related item like today, the big news was the employment situation. So that gets people revved up. I'm not saying you have to do all this every day. I'm just showing you how if you're going to become an advanced trader, you're going to want to do what I'm telling you here, number 3, and that is realizing that there'll be different market conditions, and especially every now and then there will be different market conditions based on the government reports and different things coming out. Doesn't matter, it just means that you should be highly aware of that. Now, I've talked about this before, and one of the ways you do that here is you go over to, got a blank Google page here. Where is it here? Hold on a second. Let me bring that up. There it is. This is our trusty Econoday calendar. Now notice that this week we had Janet Yellen speaking. You click on this here. Federal Reserve Chairman testifies before the House Financial Service Committee. Okay. I'm just going to tell you a little interesting story about what happened this week, and it'll help you understand some things. So she's going to testify before the House Financial Committee. And everybody thinks interest, all these top financial experts, everything have been saying for a while. Why doesn't she raise up the interest rates a little? That'd just be a normal thing, for, good, healthy for the market. Well, lo and behold, she's going to be testifying today. So the day before that, like him or not, he's very gutsy, and I think he'd be good for the country. Donald Trump comes out and he says Janet Yellen is very political, and she is keeping the interest rates low so that Obama can go golfing and have a nice rest of his last year in the office without any problems. In other words, he's basically accusing her of keeping the interest rates low to keep the market propped up and save interest raises for the next president, and that'll cause the market to get hammered, and it'll save the problem for the next president. Now, that's a pretty bold statement, and he had his reasons for doing that, but gee, what a coincidence how when she comes out at the meeting on this day, I'm just giving an example, I'm not being political, I'm just telling you what happened this week. What a coincidence how she comes out and says, we're going to raise interest rates in December, parentheses, this was her statement, if the market conditions warrant it. Well, that's what she's been saying all along, but she never said we're going to raise interest rates. She made that statement, we're going to raise interest rates if the conditions warranted. So what she was really doing is responding to Donald Trump, essentially responding to his statement, accusing her of being political and keeping them low. Now, all I'm telling you this for is that what happened the next day as the volume soared and the market started going crazy, and for the next 2 days they hiked the market up. All pullbacks got hiked up and the price got jammed up to the ceiling. So it was almost confirming that that's what happened. But first of all, there was a big pullback. So the point is that you have to check the financial calendar and just be a little bit aware of what's going on in the news so you can prepare for your boomerang trades. Now, Once again, I'm not saying you need to do this necessarily because boomerang's going to work no matter what. But that way you won't be shocked when you get a market that goes into some kind of insane whipsaw or something like that. So after that happened, you notice how we got a stronger sell-off today. In other words, let me show you this. Again, I'm just talking about this number 3 point here, that realizing that there's going to be different market conditions, and I'm showing you details today how to adapt to those and how to discover when they could possibly occur. Let me show you this here. It was these 2 days. This was just, in my view, this was just complete madness. I mean, I couldn't even, it was like, what the heck is going on? Look at this here. The market opens up, makes a little dribble lower, and launches on this tirade to the upside with zero pullbacks, no boomerang pullbacks, no secondary. Look at this, it goes straight up and there's no secondary level boomerang trades. The only real boomerang trade you had on this day was this long here. You see this? So you got to be aware of that. You go, wow, why is there only one boomerang trade? What's wrong? It's, you got to become, you can't be naive. You got to understand what's going on in the markets. There's one trade here, and here's the market going up, up, no secondary pullbacks. We didn't get a counter arrow. Up, up, look at this. This is madness. I've never seen anything like this. Listen to me, I'm being honest, which I always am. In 25 years of trading, I've never seen anything like this. Straight up, and then they get up here and you think, okay, well, enough's enough. My God, it's hour before the market close, and then they go straight up further. This is complete madness. But that was because of this, Donald Trump accusing her of that, and then she comes out with this statement, we're going to raise interest rates, and then when the market started trying to pull back, they jammed them up further. It happened the next day too. Here's the opening, a little pullback. Here's a boomerang trade here. Now we had a counter channel that failed. So we're looking for the next up trade. Here's the next up trade here. So you got 2 boomerang trades. Here was another counter channel that failed and another one that moved up. So you got 3 boomerang trades. But again, the main point I'm trying to show you here is the unreality of this market condition. And this way you can understand what the heck's going on. Look at this. Sure, you got 3 boomerang trades if you follow these exact rules. That's boomerang's going to do that for you. But this thing on the second day in a row went straight up with virtually no pullbacks until the last hour of trading. The prior day, it went straight up until the last 10 minutes of trading. Right here, you see that 10 to 1, which is 10 to 4. There's no such thing. There's no way for the market to do that. The market at the time, I was watching the higher time frames while I was trading myself, and the high 5, nothing, it was neutral at best, if not bearish, and this kind of stuff is going on. So you're going to be puzzled once in a while, like you're trading boomerang on this day, you had one trade. And the whole time you're sitting there patiently, like I know you do, we didn't even get a counter move to create another boomerang buy. It just went straight up. You have to scratch your head on a big move and you got one trade, a little bit frustrating. Well, like I said, on this day, we had the counter moves that allowed you to take a second level trade here, but third level trades we don't take. You might have taken that, but we don't take them. Same thing. Virtually impossible. So I'm talking about this week's trading. It's very important. So then they broke during the Janet Yellen testimony, and then she made those statements, which I believe was because Donald Trump called her out and said, what are you doing? You're just propping up the markets, saving a problem for the next president, which he and many assume it's going to be him. So, it was bold. He can do that because he's not politically supported by super PACs or things like that. In fact, he was the first one to really let the public know about these super PACs and how artificial they are. When a candidate has somebody give him $100 million, that guy gets elected president. It's like, well, he gets a phone call, says, well, we made president now, so here's what I want you to do. Is that good for the American people? I don't think so. But again, the point is, so after the market broke with that, now we come back, and here's what happens today. They get roasted on the downside, and then they start pulling back up. But again, the same routine going on here as this was the Janet Yellen day here, but the same routine here. They got hammered down lower today. They came back up. They kind of wiggle woggled around, and then sure enough, back up into the close. It's just an unreal market. Now, today I saw a lot of articles from European and other um, investors coming out, or not investors, but economists and stuff saying this is impossible. They said this is kind of a surreal market and all that. So, uh, you know, it's something that you really got to think about. And I'm just talking in terms of, again, about boomerang and how to prepare for the market. I've got all the notes. I record every day all the levels and my indicators and my underlying market force for October. And the whole month was practically straight up. It was like an 11-12% gain on the S&P 500. And all I'm saying, enough of this, but the main point, and it caused me to want to bring this up this week, you got to be aware of possible market conditions that can affect the market. You don't need to know that. You can just trade boomerang according to what shows up according to the rules, and you'll be fine. But if you're going to go pro, I just want you to be aware it's simply a matter of checking the Econo Day calendar and just flipping over to CNBC. That's if you just want to use that one. I use Bloomberg, CNBC, and Yahoo News as mainstream news. I don't read the articles. Some of them I do if they look really interesting. But I just kind of scan like in the morning, you can read here what they're going to say about the government reports, market lower because of this or that or this and that, stocks mixed on the close, et cetera, et cetera. You can just quickly look through some of the different articles. I'm not saying, again, that you really want to read all this stuff. It's not that important, but just a general scan. And then that way, at least you'll be aware of what possible things like this story this week with the Donald Trump calling out Yellen here is pretty amazing. So anyway, those are the three key elements. Now, another important thing, once you know these three things, the patience to wait, faith in boomerang, number one, by really learning how to trade with boomerang, the patience to wait, because on that one day I just showed you, there was one boomerang trade. And you can't get mad. You can't blame boomerang. The market's going straight up because it's rigged up by the Federal Reserve. And it's offering you one trade, and that's all the system's offering. But you have to sit there and wait. So this is the next point here, is that you want to view boomerang as a job. You go to work every day job. A go to work every day job that you get up, the alarm goes off, you're replacing your current job with the opportunity to sit at home, take these proven winning trades, and replace your current job, and with the potential of no ceiling on your income, because all you got to do is add more contracts to these proven trades and you can increase your income. So if you have that correct mindset of I'm just going to work and you plan on that, you don't look, I mean, you can use it as a part-time thing. You can use it however you want. Go in and make a few trades in the morning. I mean, that's totally fine, and continue your existing job. That's fine. Or replace it, as some of our members have replaced their entire careers. But the main point is that if you look at it that way, that's the road to success with trading and with boomerang, and you can do it as a career. So, with that in mind, let's get started and go over some of these setups here, and we'll have an early session, and I'll go back over any comments or questions made. I'll be able to go back over all that with you just after I'm done here. I just wanted to make sure that we understood how to view that, because this happened this week. I wanted to show you little interesting things, how that related to the volume shifting, how the market made these ridiculous upside moves that I've never seen before, and how that can just come out of nowhere and it might catch you off guard. But if you're following boomerang and you're just there really aware of the system and the methods, and you got a lot of faith in it, if boomerang hands you 10 winning trades or it hands you one, you're not going to complain or feel bad about it. And ideally, you'll know why it's happening. So I'm going to show you a couple little tricks of ways to watch the market here also today. Now, boomerang, as you know, for those of you brand new, well, let's just use this last setup, which was the closing boomerang trade today. With Boomerang, you have first of all this thin dash line. That's the trade signal line, and that colors the candles within Boomerang. They'll change from red to green to gray and an off kind of. Sometimes you'll get an off red color. Those are just bias shifts in the market shown up in the candles here. Sometimes, like here, you got three mixed bullish and bearish. Hollow candles are bullish. The solid ones are more bearish. And then you get a gray candle, a red one as they drop down here. Then hollow candles moving up. I'm just showing you a little candlestick theory there. But the main idea is that you have the trade signal line is going to color those candles. You then have the dynamic trend bands. Well, you have the Cobra, which is this dotted line going through here. That's the front runner usually of the main dynamic trend bands, which is this thin dashed dotted line here, colored the azul, kind of bluish color, and you have this thicker one here. That's dynamic trend band number 2. So Cobra is going to run between those and generally front run them. See the Cobra turning green here? The candles are jumping up. The Cobra is turning green ahead of dynamic trend band number 1 and number 2. And as the Cobra moves up and crosses dynamic trend band number 1, it actually forms its own little dynamic trend band channel within the main dynamic trend bands here. And then you see the matching dynamic trend band number 2 come in. When those are all matching, you trade a pullback to the signal line on a new open channel. And these dots represent the pullback to the signal line up to 6 candles from the opening of the channel. That's it in a nutshell. We have our bias indicators down here, bias index number 1 and number 2. We used to focus more on those on the early Boomerang copies that I made, but since I added and refined the dynamic trend band number 1 and 2 to form Ultra Boomerang, the main thing, it makes it easier because all you're looking at is the DTBs and the relation to the Cobra and the trade setups here. And we take 3 points and we use a 5-point stop, which rarely gets hit if you trade them right. Now here, for example, you can see the Cobra and dynamic trend band number 1 channel opening, but we're still waiting for prices first of all to go below dynamic trend band number 2. Now if DTB number 2 is flat and the Cobra dynamic trend band number 1 channel has opened and you get prices there and you get a pullback signal line, well, according to the exact rule, you're supposed to wait for the spread to be tight here, and I've talked about that many times, either to match or for the spread to cross over, be really tight with a 1.5, or to cross over. If you get really good at Boomerang, sometimes you can modify that and just see that the prices are spiking lower and you got yellow dots here, and you can trade those if you get good at Boomerang. It's not part of the exact method, but I'm just letting you know that, like anything, it's just like talk to a professional football player. He's got all his exact rules. He's got the plays down, the coaches, everything. But when you're out there on the field, and it makes more sense to veer to the left and then have the player pass the ball to you, that's what you got to do if you're a little crowded over on one side. You know, that's a simplistic explanation, but nobody's going to blame you if you catch the ball and run for a touchdown, right? So anyway, that's one thing, but mostly the rules are very simple. We look for the crossover, we will look for a new channel, we look for all the dynamic trend bands to match, and there's one modification of the rule, and that is, if you, let me find one here. Here's a classic example. You're waiting for the market moves down really fast lower here, but you don't have the dynamic trend bands spreading here in a tight enough fashion. But if they make a fast move and there's a brand new crossover, you can trade a pullback to the Cobra, which was right here. It's the only time we're going to use a Cobra as an entry, when there's a new channel crossing over and moving down very quickly, and then a brand new crossover the dynamic trend bands. You can trade a pullback to the Cobra and use that as the signal. And there they go down, taking them down here. See how that is? Here's an example here too of a market crossing over after a steep move. You're waiting for a tight spread here. The channel's opening and moving very smoothly. You're not getting a whole lot of whipsaw around here. If these candles are whipsawing and flying all over, you merely wait for the second buy channel, because there'll usually be a counter sell channel. But with them nice and smooth like this, there's a tight crossover. You buy the pullback signal line and you get your 3 points. And there's a third type of trade within the crossover, it's actually a second boomerang trade, and that is a second level trade. I talked about that earlier on that weird day where they went straight up. And let me see if I can find one here. Don't have one today. We'll come across one and I'll point it out. Let's go all the way back here. And like I said, I'll be getting to your questions in about 10 minutes. I'm not going to spend a whole lot of time today going over all the setups, but a good majority of them here. But I'll go in kind of rapid fire session, and you can ask questions. We'll spend some time after I turn off the recorder and go over those with you. In about, I would say, approximately 15 to 20 minutes, we'll do that. And we'll come across a second level one here. So there's only really two types of boomerang trades. And that is the one based on the crossover of the dynamic trend bands, and a second level trade. On the just repeat on this, on a crossover, when we're focused on a new trade on a crossover of the dynamic trend bands, we're going to look for the Cobra to cross dynamic trend band number 2, and we're going to either look for the bands to cross, or it's okay to take a trade if you got a new buy channel like we do right here. This is the first trade going back 2 weeks. If this spread right here between the trend bands is 1.5 or less. Now if I put my cursor, you got to use a cursor. If I put my cursor right here, you'll see over in the far right 45.94 even. And if I pull it down to the dynamic trend band number 2, I'll see 45.92.75. You see, that's 1.5 spread right there. So once that's there, and you can just actually look at it. You don't have to always measure it. I usually do, but you can just glance at it and see they're just really tight, ready to cross over. You can buy that pullback to signal line, and you have a 90% chance that that price is going to jump to the upside in your favor. Why? Because I got a buy signal, you got an upside dynamic trend band crossover, pullback signal line, and up they go. Now here there was no second level trade. In order to get a second level trade, we'd have to see a counter sell move against this up move with an actual arrow to the downside printing, a failure of that crossover, then a new counter buy arrow printing to the upside, and then a repeat of this pattern, a pullback the signal line, and up they go. It's so easy to learn because there's only those two setups. Let's see if we can get one. We don't have one here either, because now this is the classic case of the boomerang setup where you're not going to trade at this signal line, because if you turn your head to the left here, you'll see this fat channel right here, what we call a fat channel, and it's formed from these 1, 2, 3, 4, these 4 spike candles at the downside. It's always going to be formed by spike candles moving quickly, reversing off this up move here. And when that forms a fat channel like that, you don't want to take that because they're going to reverse. But the modification of the crossover is obviously we're looking for the crossover or the 1.5 point spread. And then what you're watching for on a fast move like this is simply, instead of taking the pullback, the signal line, you're going to use the Cobra instead as the entry point. So there's the brand, and it's got to have a brand new crossover that's occurring. There's your pullback right there to the Cobra level at 46.11.5, and down they go. So there's your 3 points there. Now notice there's no counter crossover. Now you could argue, well, there's one here, and that's true, but it's just a little bit extended. You have to use common sense that the market got way extended down here and then blasted lower. There was a counter, but it gives a good example. Here's a counter arrow here, even a pullback to the signal line, but it's not a buy trade. It's just it's a counter attempt to change if it changes the color of the dynamic trend band, then that's a counter crossover that works, and that changes the whole pattern. It resets it. And then what happened was there was a quick sell channel arrow and a quick pullback signal line. Usually when they print on the arrow, it's still a valid, but it happens so quick that it's kind of hard to catch them sometimes. 97.50 shot straight down to 91.50. Plus, as mentioned, if I was watching this trade, there's too much downside here. A counter move would be a higher risk trade at this far of the level down, especially you can see the Cobra just getting ready to cross over here. Usually you would like to see something like this occur maybe right in here where they pull back here, then they go up here, and we'll come across one in a minute here. Find a counter buy arrow that fails, then a counter sell. Let's see if we can find one here. So now here's a steep dynamic trend band. One of the rules, don't trade against a steep dynamic trend band because they're just too high risk. Obviously the Cobra crosses over, you got a buy channel, and sure there was a pullback signaling that ramped up, but it just went into a massive whipsaw thing here. Look at this here, 97.75 whipsawed all the way up to 04.75, a 7-point candle, very rare, but that's why we use the 450 ticks. You can measure these whipsaw candles really clearly. Obviously, this is something you wouldn't want to trade. The whipsaw is just telling you to stand aside. Do you see that? One of the rules of boomerang, when you get whipsaw, just stand aside. Don't try to figure it out. It'll drive you nuts. Look at this. And then after the whipsaw started, it continued all through this period. I mean, all morning here. I remember this day. It just was relentless. I just sat there going, God, when's it going to end? Now, along the way here, there are several times where the rules of boomerang did occur, where you got one of the rules, if all the trend bands are matching the same color, in other words, you got a sell channel here, all the trend bands are matching the same color, you can trade that pullback the sig line. Here was a successful trade here. Here was one here that ran up from 4,600 even all the way up to 4,604. But again, you have to just kind of weigh the risks. In the midst of this wild whipsaw, you might get stopped out, and it's kind of against the rules of boomerang. You know, yeah, the trend bands are matching, but look at the whipsaw here. Like if you tried to short here based on that, you'd have got knocked out. It's just too much whipsaw. Now, with the crossover occurring here, and the sell channel here and the tighter trend bands configured together here, you might have taken this short here. Now this is kind of a weird example of a second level trade. They went down in the whipsaw, a counter buy channel that failed, a new sell channel down the way, but that's not a good example. Usually you don't want to take them in the midst of a whipsaw channel, but more of a smoother type. Now here's another. This is what I'm saying. You've got to be aware that the last 2 weeks we've had some very strange market conditions. So you just have to be aware of those. It doesn't change the rules of boomerang or change anything, but you just need to be aware of it. Here's a classic boomerang matching dynamic trend bands. Buy trade here. Here's a counter sell channel that fails. See, it's sell. Even got some yellow arrows on there. And it fails to change the pattern of the dynamic trend band number 2 or number 1 even. And we get a counter buy channel, and that's where you look to buy. Here's the pullback sig line at 7.25, which held the stop. No, actually, this one here, one of these rare cases where you got a counter buy channel, the whipsaw is so strong, the pullback, the sig line was here at 750, and they whipped them down to 0.02. So it just barely stopped out this trade for 5 points here. Then you got another counter, but it didn't disrupt the color of the dynamic trend band number 2 or anything. Then you got a counter buy, and then the second little resume. This is very rare here, but this was like a counter sell, counter buy, and then the counter sell whipsawed out the buy signal here at this level. Now, if for some reason you caught them here, if for some reason you grabbed them at this level right here at 6.25, you would have just barely survived this from getting stopped out with the 5-point stop. That's why we use 5-point stops. You're giving that trade a lot of room to breathe. If you got it here slightly higher at 750, then they would have got stopped up by this one. But again, this is where the arrow changed and you had an immediate pullback on the signal line signal there. Harder to catch. Anyway, and if you're a really bold boomerang trader, seeing this channel opening up here, you might have might have purchased this trade here on the new buy channel opening up with all the dynamic trend bands matching, which would have been that rule. All the trend bands are matching. You got whipsawed around in here, or you survive the trade if you got them here, and then up they go, and no counter sell from there. This is one of those weird days. Again, we're just pushing them up, up, up. No pullback in sight until the final hour, which is kind of ridiculous, but that's the way the mop flops. So here's the sell channel opening up here. All the trend bands are matching, right? But you have this fast swoosh to the downside. So what's the rule? You don't trade the pullback this signal line. Now, because they crossed here, you could have traded this one. That would have been fine because the trend bands have already crossed. There was not just a tight spread, but they had actually already crossed. So you could trade this pullback signal line here, and down they go. If you miss this fast drop, you would have probably been better off trying to catch the Cobra, or at least some price better than the trade signal line. That's just common sense and boomerang savvy as you're learning to trade with the system. But it's still the same idea that there's a crossover and you're getting into that crossover move on one of the pullbacks to the signal line or the Cobra in the case of a fast drop. I hope that's clear for you. These are just part of the regular system of trading boomerangs. So going into the next day, we got about 10-15 minutes left here. Here's the opening. So right here you got a very choppy opening here. Nothing to do here, just wait, let it all kind of soak in. Here's a new sell channel coming in. The Cobra crossing under the dynamic trend band number 2 is always a good sign you want to watch for. Watch for the Cobra to cross. Prices coming down, and there's that tight spread right in there, so you can trade that pullback signal line, and down they go. See how reliable the system is? Learn the system and follow it, and all your trades are going to pan out for you. There's still going to be market whipsaw. There's still going to be difficult times sometimes, but you will have very, very good results. So the market here goes into whipsaw and it just starts going crazy, and you just got to sit it out. There's nothing to do in here. Don't try to figure it out. Big extended gray candle, 2 counter green candles whipping up, big red candle dropping, another red candle, 3 green candles spiking up. Just sit back and say, okay, there you go. So now you've got, again, the crossover here coming in, crossover on the pullback signal line, opening channel here, pull back to the signal line, and up they go. Now up here, notice the new sell channels opening. You have matching Cobra and dynamic trend band number 1, Cobra crossing under the dynamic trend band number 2. However, the spread is still a little bit too wide, so for the exact system, let them run lower. But now because you got exact crossover coming in here, right? Exact crossover coming in here, the rule is you're going to trade on a pullback to the Cobra. You're in the right setup. The crossover is getting ready to occur there. They made a fast swoosh to the downside. There was no setup in here because the spread was too wide. Here's your trade in the signal line down here, but you're not going to take that one because you got a fat channel forming here. So all you're going to do is take that trade up here at the Cobra at 46.19. And there was a little pressure on the trade as they whipped up. about a 3-point move against you, no big deal, and then down they come, right in line with the bias. Same here. See, some of these trades, the whipsaw will cause these wider spreads on the DTB, and you just have to be patient for everything to match up. Now, in this case here, they took off, and there's nothing you can do. There's no trade set up here. You just have to wait here. See what I mean? No trade set up here. I just have to wait and see what happens here. Same thing here. Then they counter whipsaw to the downside. What are you going to do? Well, here's where all the dynamic trend bands are matching, right? You got a fast move the downside. The dynamic trend bands are matching. You don't want to trade down in the hole here. You try to get them up here at the Cobra. Now, they didn't hit them here. They probably didn't hit them on this one, but if they did, you had a nice trade to the downside. You might have had to miss this trade if they didn't trade up through the Cobra. You would have seen it if you were there live. It looks like they just missed it from what it looks like to me. You might have got in just at the market on a move close to the Cobra there and had a successful downside trade. And it was later it was in the last hour, just before the last hour, so you might have caught that trade. But that's what I'm pointing out. When all these things heat up in the press and there's different things going around of all sorts, that's when you have to watch it a little bit and make sure that you understand the conditions that are going on. You're watching a little bit, not being a news hound, but just kind of watching and keeping an eye on what's going on and how it might affect the markets. So here's a new channel opening up in pre-market. This doesn't count. It's way ahead in pre-market. Here's the opening up here. And once the opening starts, it like resets the whole pattern. I usually don't trade the first 10 or 15 minutes, but here they are jumping off the opening and pulling back down here for a buy trade here. But again, early whipsaw would have been a little scary trading that, but it ended up panning out nicely. Now this is another example. See, that's why I'm trying to show you all these examples. Here's the Cobra and the DTB number 1 matching. Prices are moving under a flattening dynamic trend band number 2, but you got to get that spread tight here in order to make the trade. That's one of the important rules. They got to be really close to being ready to cross over so you don't get faked out. So they made a fast run here, so what you're going to do then is do what? That's right, you're going to trade a pullback to the Cobra, and you can see clearly here the price traded through the Cobra. See that 46.20 half right in the Cobra? If I put my price marker here on this candle, you can see the high was, why is it moving here? There it is. Get it moving here. Okay, here we go. You can see the high is 46.21 here, and you can see the Cobra is at 20 half. You see that? See on the right, 20 half? And notice on the candle, the high is 21. So this traded through the Cobra. You would have got short at 20 half in the Cobra and a fast move to the downside. So it just takes a little, just the knowledge of coming to these webinars and learning how to trade with Boomerang. It's very simple, and you follow the simple rules for trade. You're trading around the crossover, and you're basically just asking yourself, when there's a new channel and there's a crossover and the spread is tight or matching, did the market shoot up in advance? Should I trade a pullback to the Sig line or a pullback to the Cobra? If they shoot up like here, here's the opening. Look, it's like a rocket ship higher. So right now, as the dynamic trend bands are matching, that's okay to trade a pullback to the Cobra. And right here is the Cobra. You can see the price traded through it. So 20 half, and the rocket ship takes off again to the upside. So as they take off, and this takes time, there's, let's see what we got. from this high up here at 807 till they finally start making the crossover, it was 30 minutes through all this. So that's what I said about rule number one is you first of all you develop the faith in Boomerang and the system and the method I'm showing you here, which is easy to do. If you go back over a bunch of charts like I'm doing with you today, you go, they're all winners. I think we had that one stopped out on that weird kind of choppy area. That's going to happen once in a while. 90% means 1 out of 10 are going to get stopped out, but the rest have all been winners. So the patience to wait, because like I said, from this high to where we're finally getting a new trade, getting ready to set up, it was almost 35 minutes. So you have to sit there, but that's the idea, is you're replacing your job. Because every trade that you make, if you got a $5,000-$6,000 account and you got 4 contracts on there, every trade's going to make you $230. So if you make 3, 4, 5 winning trades a day, you're going to put $1,000 or more in your pocket, and that's well, that's 20,000 a month minus commission. I'm just doing round figures times 11 months because of course you can take a whole month off in December. That's 220,000. So after commission, you probably made $200,000. You see what I mean? How does that compare? And what is the price you have to pay for that? Learning the right trade setups. It's all in the emotions. It's all in the human condition. Being patient, exactly what I told you, the right thing. Having faith in Boomerang. Number 2, having the patience to wait for the exact correct setup. And then realizing that there will be different market conditions. Like this week was a radically strange, different market condition caused by some possible political wranglings and the fact that Janet Yellen was called out for rigging up the markets. Nobody else has had the guts to do that. So again, it's not a political statement, it's just a fact. Donald Trump called her out, and all of a sudden, like she's never said before, she directly states, we're going to raise rates in December. And then, if the market conditions are right. Whereas prior to this, I've been saying for over a year, they're not going to raise interest rates. The news keeps bantering and back and forth. Will they raise rates? Will they not? I'm so sick of that. They're not going to raise rates. And she's never said, we'll raise rates in the next meeting like she did this time. It's the first time she's ever said that. Gee, what a coincidence. The day before Donald Trump called her out for rigging the markets up to favor the current administration. Gee, what a coincidence. Then she says, oh, okay, we're going to raise rates next month if the market conditions warrant it. But that's what she's been saying all along. You see, the teasing the whole thing along. So it's pretty good. Again, it's not it's not trying to be a political statement. I'm just trying to tell you a fact of what happened. So that's pretty good. That's a good sign. We need people that can come in and shake this thing up a little. We're so sick of these lying politicians and these lying Federal Reserves. We need somebody to shake it up a little. So anyway, back we go again. Same thing. Keep your eye on the dynamic trend bands for that spread. Once you get that spread tightened up to 1.5 or more, you ask yourself, did the market make a fast run? In this case, on the sell side, after the sell channel, did it make a fast run to the downside? And what should we do with the conditions? So here's the market here right now at this point on this candle getting that tight spread. So what are you going to do? You're going to trade the price at the Cobra rather than here. Trade at the Cobra at 29.75. Up they go a little bit against you, and boom, down they come. See how that is? Now here's a second level trade here. Here's the market trending down. A new buy channel comes in, whips the prices up, but it doesn't change the downside pattern here. Here's a new sell channel coming in. Now, if you were fast, there was an immediate sell at the sig line there. Boom, down they go. Or even if they fell down here and you caught them down here and shorted them down there at 1750, they still made a 4-point move lower there. But this would have been tricky if you took these here. And if you saw this and you waited and shorted the Cobra, then you got that downside move there. But generally the trade to the Cobra is reserved only for a brand new crossover where there's an exact crossover occurring, not in a second level move. I'm just telling you that. That's only reserved, that modification is only reserved for a brand new crossover. Otherwise, your risk gets a lot higher. Like here, they eked out a 3-point gain, but it was a little bit riskier there. So same thing. Again, the whipsaw, the massive whipsaw this week, and it was because of just the shift over the last 2 weeks. There's been all this stuff going on, kind of getting the markets pushing higher into October, but just kind of an artificial, consistent ramp up being done with whipsaw. And that's a proof that it's kind of artificial because they're not just going straight up. In some days they were like those ones I showed you this week, but it's whipsaw because the sellers are coming in fighting this climb that's rather artificial. Anyway, here's the spread tightening up here. Here's the new buy channel opening up, right? Pull back the signal line with the spread tight right here, 19 and a quarter. 19 and a quarter runs up to 23.75. You're out of the whole thing right in here. This move here to here, that's your 3 points, and you're out of this trade for the rest of the trade unless what happens? That's right, you get a counter sell arrow. You got to see the arrow print and show up. A counter move, because you don't know that it's going to fail. It may keep going to the downside, change the color of the DTB, and that resets the whole pattern. But it goes down, it fails, a new buy arrow opens up, and there was a pullback, the signal line right here, right when the arrow opened up, or the second one here, 24 quarter, and up they go to 30 quarter. So within this whole stretch, you grab 2 winning trades right here and right here. That's all you took. Those were the winning setups, and they worked. And if you traded both those, and you had a small account with $5,000-$6,000, you trade 4 Countex, you put close to $500 in your pocket after commission, approximately $230 per move after commission. $500 in a half an hour. You see, no waiting for meetings, no making endless phone calls for your job, no going out on appointments, following up complaints or problems. It's a lot of work. So again, get good at trading with Boomerang, and you will be very successful in your endeavors to trade the markets, even though they're a little crazy. Sometimes I hate to use that word because maybe we're crazy for trading them, but the truth is the markets aren't crazy. Nothing's crazy. They're just high risk and full of whipsaw, sometimes depending on market conditions, depending on political things, depending on war things that happen, depending on political moves or military moves, like we're having all this stuff in the Middle East again. You know, it shakes up the markets. It causes nervousness. You just have to be aware what's going on, but Boomerang's going to work no matter what if you follow the rules. I could go through all the setups over the next 2 weeks. You can see them occurring here. Sell here. You can see the buy pull back to the Cobra here. You can see all these different things occurring. The same things I just showed you over and over. Matching dynamic trend bands, up they go. But all I'm saying is the most important thing is to go over these yourself once you own Boomerang, and you have to develop what I started the webinar out with today. Number one, the absolute number one, you have to study and research Boomerang so you have tremendous faith in Boomerang, almost blind faith, what I call robotic blind faith, that when that trade signal sets up and all the trend bands are matching, you get that pullback signal line, you reach up here and you go buy, one click, and you're long right here, and you get your 3 points. Because when you can't see what's going on the candle, here's what you would see right here on the right side of the chart. That's where you have to have, that's where your extensive study and research of Boomerang with what I'm showing you here on the webinar, going back over these webinars and then doing it live on your own Boomerang, you develop that faith and you'll see that this is what is going to happen. And that's how you win at Boomerang, and that's how you can replace your current work with a career in trading the futures. So I really appreciate you joining. Like I said, we're just going for an hour here on the discussion here, and I've had this recorded and everything. And then what we'll do is now go into any questions that you might have, and I sure appreciate it having you join us today.